Let me read you the title of this Barron's article that came out in October. It says, over 50% of CEOs say they're considering cutting jobs over the next 6 months. The majority of people running companies in America have already begun planning for layoffs in 2022, and if you dig a little bit deeper into the study, it shows you that 39% of CEOs in America already have implemented hiring freezes in anticipation for an economic slowdown coming sometime in 2023. Now, this is where you're having a lot of controversy because, yeah, more and more people are starting to say that there might be an economic slowdown in the future, but you also have a lot of people that keep saying our economy is not going to slow down, everything is just fine, there's nothing for you to worry about. But this is where I want you to not just listen to what people say, but watch what people do. Because you have the President of the United States that came out recently in October who said that there's no recession coming. He does not believe that there's any economic slowdown coming. And if by some crazy chance there is some recession, it would be very mild and nothing for you to worry about. In addition to that, you also have the Treasury Secretary of the United States also come out and say, how could there be any sort of recession? Not only is there no recession coming, the economy is doing very well, and there are no signs of any instability in our economy. Now, I'm not saying this from a political perspective. The reason why I'm bringing this up is so you can take care of yourself, your family, and your family's finances, because on one hand, you have very influential people who keep saying there's nothing for you to worry about with your money, there's nothing for you to worry about in the economy. But if you look a little bit deeper, you have some very influential people who are acting very differently than what people are saying. You have the majority of CEOs in America that are right now preparing for a recession. Most CEOs in America believe that we are going to enter a recession in 2023, and not only do they believe that we're going to enter a recession in 2023, they're actively doing something about it. They're cutting their costs, they're doing layoffs right now, they're planning for layoffs in the future, they've already begun hiring freezes, and they're doing things to start saving cash. Why are they saving cash? For two reasons. One, to protect themselves if and when things start to slow down more, to protect themselves from economic pain, but second, to capitalize on opportunities that might come their way. And so you got to understand, yeah, some people are saying there's nothing for you to worry about, but some people are acting very differently. And this is where you want to just take care of yourself and protect yourself. How do you do that? By doing what these people are doing. Start putting aside cash, start cutting your costs, make some more money, have some extra cash ready. That way you can protect yourself from an economic slowdown if it does happen. Even if you don't believe it's going to happen, at least protect yourself. That way, in case you're wrong, you have some extra cash. And if nothing bad happens, all you have is some extra cash. No big deal. You can spend that cash, go to Disney World. But then you also have cash to take advantage of opportunities that might come your way. Because if things continue to get worse, and you have cash, now you can buy assets at a discounted price. Now, if you've been subscribed to the Minority Mindset and you've been following my videos and you've been listening to market briefs, this really shouldn't be that much of a surprise because the Federal Reserve Bank has talked very openly about how they think the labor market is too tight, aka the Federal Reserve Bank believes that too many people have jobs. Now, of course, they don't say it like that. They say that the labor market is too tight because that's the political way of saying that. And so now when they talk about raising interest rates to cool the labor market, what that means in layman's terms is they want more layoffs. They want people to lose their jobs because in the Federal Reserve Bank's eyes, that's a way to see that they're winning the fight on inflation. So the Federal Reserve Bank has openly said that they want to cool the labor market. What does that mean? They want more layoffs. And now to see CEOs acting this way really isn't that much of a surprise because the Federal Reserve Bank has been saying this for months now, and we've been talking about how this is going to be a consequence of the high inflation and the fight on inflation for a very long time now, and now you're seeing it happen. And this is where you want to make sure that you're preparing yourself financially and also at your job, because there are going to be some people that are more susceptible to these layoffs than others. Now, if you have not joined Market Briefs yet, if you don't know what I'm talking about, Market Briefs is a free financial newsletter that I created. It's a free resource that I created to help you, to help investors stay up to date on what's happening in the financial markets, because the reality is the next 12 to 18 months are going to be absolutely crazy. Some people are going to become incredibly wealthy while others are going to lose everything, but it requires you at the first step to be aware of what's happening in the financial markets. And with Market Briefs, you get a daily breakdown from my team of what's happening in the stock market, the real estate market, crypto, inflation, the global economy. That way you can make smarter decisions with your money. And the best part is it's completely free, and you can can read market briefs in less than 5 minutes every morning. So if you have not joined market briefs yet and you want to do so, I got the link to how you can join market briefs down in the description below. So come 2023, who are going to be the first people who get fired and laid off from their jobs? Well, according to the polls, it is going to be remote workers, and it's also going to be the quiet quitters from their jobs. There was a separate poll done where 3,000 managers were asked who are they going to fire first, and 60% of them, so the majority of them, said that remote workers are going to be the first to go in their company. So if you are worried about your job, and especially if you are a remote worker, this is where I want you to just rethink how you're presenting yourself at your company, because we are going through a changing phase in our economy. And if you are worried about your job, this might be a time for you to consider potentially going into the office a little bit more, maybe doing a little bit extra work. That way you can show your managers that you are a valuable asset. Now, does this mean that you're going to be 100% safe? No, but this is where I want you to just be a little bit honest with yourself, because we're going to be going through volatile times, and it's unfortunate. I get it. Sometimes, you know what? Crappy managers run companies into the ground. Sometimes you have crappy executives that run companies into the ground. They take the big checks and people lose their jobs. It's unfortunate. I get it. But this is where I want you to be honest with yourself and see what is the most important thing right now. Is it to be righteous, or is it to keep your job? And you got to be honest with yourself and understand which one is more important for you right now. And if keeping your job is extremely important for you right now through the next 6 months, through the next 12 months, then I want you to understand that and make sure that the actions that you're taking at your job are in line with that, where maybe you got to go into the office a little bit more. Maybe you got to put in a little bit more work. Maybe you got to show your managers and other bosses, whatever, that you are very valuable, because we're going through a phase of a slowing economy. And if I'm completely wrong, if our economy bypasses a recession, everything is just fine, well, then go back to being remote whenever things start to clear up. But this is where, look, I'm showing you that the majority of CEOs say that they're going to be doing layoffs, and 60% of managers are saying that they're going to let go of remote workers first. You don't got to hate me for it. I'm just telling you what the numbers say, and this is where you want to be prepared and make sure that you're taking the right actions to protect yourself and your family. Remember, watch what people do, not what people say they're going to do. In the beginning and middle part of 2022, when we first started to see layoffs, everybody said that these layoffs were going to be contained with tech companies and these big startup bubble companies that had raised a ton of money in 2021 based off of these bubble valuations. And now, because interest rates started to go up in the first few months of 2022, those companies had to consolidate, and that's why we were seeing layoffs in the startup sector, and it was going to be contained there. Now, fast forward towards the end part of 2022, and now we're starting to see layoffs across the board. You're seeing big companies, you're seeing blue chip companies, you're seeing more established companies doing layoffs. Why? Because now these higher interest rates and the slowdown in the economy and the higher inflation is trickling down to many different parts of the economy. And as inflation is still high, and as the Federal Reserve Bank is working to raise interest rates even higher, and as the economy continues to go slower, all these things are going to continue to trickle down to many different parts of the economy. And this is where I'm saying this so you're aware. That way you can start protecting yourself and taking care of yourself. So at the first factor, you protect yourself by making sure you take care of yourself at your job. Now, the second way that you can take care of yourself is potentially creating another stream of income. Maybe working to create a side hustle, investing into your own business idea, investing into a way where you can protect your own income without just your job. Then after that is creating a financial cushion for yourself. Maybe now you got to work to build your emergency fund. You build some cash, that way you have some cash to protect you for emergencies. If now you're a little bit more advanced in your financial planning, you already got your emergency fund, you got another stream of income, you have some good certification, so even if you lose your job, you can get another job. Well, then this is where you're starting to put cash aside, that way you can take advantage of opportunities that might come your way. Remember, look at what people are doing, now what they say. Why are some of the biggest companies in the world working to cut their costs right now? One is so they can protect themselves for an emergency, but also that way they have more cash to purchase good assets at a discounted price. Because when you have economic slowdowns, when you have market crashes, that's when you see asset prices fall, and that's when these corporations want to come in and scoop up these good assets at a bad price. And that's one of the things that you can be doing, maybe not at $1 billion level, but maybe $100 or $1,000 or $10,000 or $100,000 or wherever you are right now in your financial journey, where now you're putting some cash aside because you're earning more money, you're spending less money, you're creating a financial buffer. That way you have cash to take advantage of opportunities that might come your way. Because one common trend of economic slowdowns is most people don't have money to actually buy assets. They're struggling to find a job, they're struggling to pay their bills, they're struggling to just get by, so they have no money to actually invest. And this is where you want to make sure that you protect yourself from an income level, from the savings level, from the investment level. That way now you're not just working to survive whatever's coming in 2023 and 2024 and 2025, but now you have the ability to thrive through whatever's coming in the next part of this economic cycle. Now, of course, if you want to get more financial education, you can check out some of the other videos on my channel. But if you want to stay up to date on what's happening, when it's happening, you can join Market Briefs. It's a free resource, and I got that link for you down in the description below. Nobody can perfectly time the market. Nobody knows what's going to happen tomorrow. Nobody knows when a pandemic is going to shut down the economy. You can't predict these things. But when you see these types of drops happen, it creates opportunities for you to come in and buy when they happen if you're financially educated and if you're prepared.